But for me, localization, in my mind, there's two elements to it. The element that I really like and think is a great business model is the national reinsurer model. I think it works in the mid-breeze here. Tammy, I think I saw Ethiopia at the end. It's a good model. It's reinsurers doing reinsurance. Here's where loses his temper with me. The localization that I don't like, and I think is dangerous, and I've seen as a broker some very scary things, is local FAC. Co-insurance, doing insurance companies doing reinsurance. Exposure management seems to go out the window. Pricing seems to take a nosedive. And it was $1 billion limit, and I went to Lloyd's. Well, my team went to Lloyd's, and the price was coming out around 900,000. I went to Swiss Re, Munich Re, Africa Re. Eventually, my team, got a price at around 550,000. Really pushed the price. It went locally co-insurance for $200,000. And guess what happened? The next day, all those co-insurers, Ryan, please get me facultative support. Our treaties exclude petroleum. Why did you write it? So it's on their net, and I know we've got regulators here. But if there is a loss, and petroleum does go bang, it's not going to be a small loss. I don't think the market can afford to pay the claims. The whole industry could go out of business in a heartbeat, and I think that's where my localization there is a dangerous game, and someone is going to face some severe consequences.
I was going to write off the back of Leslie's comments, but again, Ryan has just covered most of it, so the next question, I'll try and go first. Well, I totally agree with you, heavily agree with what Leslie pointed out earlier on. I've just recently moved back to Nigeria, become fully localized. Having seen insurance, reinsurance from Lloyd's and the way it's done here, leaning towards Ryan's point, I'll prefer lean heavily towards the reinsurers doing the FAC retros or any reinsurance back into Lloyd's than the insurance companies, so that it's properly regulated, prices are done properly, and that way the risks are controlled in a more monitored manner to the benefit of the insured. So it's a shame we don't have Mr. Commissioner in the room, to kind of hear our own views from our own side and how we see it as carriers and the things that we suffer. Because if we have regulators supporting most of the things that we want to achieve with trainings and trying to helping the insurance companies grow in terms of their treaty performances, we'll go a very, very long way. So I just wanted to contribute heavily to Leslie's point and Ryan's point.
Thank you.
Thank you. The way I read it, I'm going to give two examples. I've been working for Swiss Re for years, and I think around 2016, 17, talking to the CIMA region, the Francophone, they say they are going to localize a lot of business. I say, I don't think it's a good idea, because of course, I was working in the other side, so I needed to get the business, and because Swiss Re was not localizing, didn't have an office in Africa. And I was fighting against that, and I even went to see the commissioner, the CICARI, etc., just to explain them that I don't think it's a good idea. Because if they take everything, there is nothing left for the other international players. And then I moved back to Continental to Africa and say, okay, I think it makes sense. Because we need to keep the business here. Okay? And at the same time, after a few years, I said, I don't think it's a good idea to keep that business in Africa. We don't have the expertise. Do we know what you are writing? Most of the time, you don't know what you are writing. If it's a single property business that we know, but if it's oil and gas, complicated risks, cyber, do we know that? Do we know the exposure behind? Accumulation, we have the tools to calculate that, to evaluate that we don't have. Do we have the people as well? Do we understand what they are doing? So I say, if we want, it's good to localize, but to a certain degree. I think it's important that we bring as well the international players. I think in markets like Africa, and the developed market, when you look at the rate of penetration, I think the Swiss, the Munich, the partner, and all the international players are still needed in the market, because those are the ones bringing innovation. We are talking innovation, we cannot innovate all what we're doing is just copy and paste what was happening in the other side, Europe, America, and then we bring it here, and then we do a small massage to Africanize it. And I think it's not going to work. We still need those international players to come here, work with us, not only taking all the premium on the other side, but work together. We need to work with them and define each of us. We know the responsibility of each of us, and then put together products, services in the market. And I think this is going to develop Africa. But localizing just for localization, I don't think it's going to work. Thank you.